are so far this week, and we'll go through now what we expect to be happening today and for the rest of the week as well. Now, what we use to do that is our newsletter. So if you're not already subscribed to the newsletter, you can just email us newsletter@tradewithufos.com and we will put you on that subscription list. Now, in that newsletter, we go through 4 major markets, where we think they're going, where we think they might change direction, volatility, as well as news as well. So we do the pre-market overview to just explain it a little bit more, expand on those concepts, explain how we got to the conclusions that we've put on the newsletter so that you guys have a little bit more explanation behind it as well. So for those that maybe are new and don't know who I am, my name is Becky. My email address there is becky@tradewithufos.com. There's also the support team, support@tradewithufos.com. So if you guys have any questions about anything I covered today, you can email either me or the support team and we will get back to you. So for those joining us from within Tradewith, so welcome back. Just a reminder, today is Tuesday, so you have stocks at 9 a.m. in terms of your sessions today, and then investing at 1 p.m., both at Eastern time. Now, normally Mondays, Wednesdays, and Fridays, those are our futures and options days, and over the weekend we have sharpening sessions. The sharpening sessions are really, really important for you guys to be able to understand more of the concepts, the methodology, psychology. It's a very important session that we do. As well as being able to bring your questions and answers in an environment where you don't have to be so stressed to be putting on trades live in the markets, when you can sort of understand the concepts a little bit more. So you have those sessions upcoming in the week, obviously today being Tuesday, stocks and investing. In terms of upcoming courses, this is for people within Tradewith or outside of Tradewith that might want to learn concepts from the ground up. The next one we have is the backtesting class. That's this weekend. That's Saturday and Sunday, September 19th and 20th. Starts at 2 p.m. Eastern. After that, we have futures towards the end of the month, then stocks at the start of October, and then psychology and trading plans further into October. If you want to understand more about those classes, if you just go to the website, which will be www.tradewithufos.com/youcantrade, you can learn more about the different courses that we do. I'll show you a link at the end as well. So just need to put the disclaimer up. I'm not going to read it to you. It would take me a while. Obviously, of course, you guys can come back and pause the video if you'd like and read it for yourselves, or you can go to the website, which is www.youcantrade.com, and you can get additional disclosure information on there. I'm just going to sort of summarize it by saying, of course, there is a risk involved in trading. You guys need to be aware of that, and you need to be willing to take that risk for yourselves. It's up to you to choose ultimately what trades you take and what risk you put on them, what capital you use, etc. We're obviously here to help in terms of ideas and demonstrations, but nothing that we say is meant to be taken as trading advice. Again, you can learn more about it for yourself if you want to go to the website. Okay, one more reminder, and then I'll show you the newsletter. So we do have an app in the App Store. It's the You Can Trade app. Not one yet for Android, so that will be coming. So keep an eye out for that. But for the meantime, for those that have Apple devices and you want to follow us mobily, then you can do that. You can download our app on the App Store. Okay, so let's get in and look at the newsletter. So the newsletter is here on the right-hand side. And every day we send it out Monday to Friday before the market opens. And in this newsletter, we go through 4 of the major markets in the world. So we look at the S&P, we look at oil and gold, and we look at the euro. Now, lots of volume, lots of movement moving through these markets. They are very big markets across the world. And you'll see as well, we use a daily chart for each of them. Now, the reason we use a daily chart is probably because it's the most commonly traded time frame, if not the most, and one of the most highly traded time frames in the world. Whether you're a long-term trader or long-term investor or a short-term trader, the daily chart does seem to fall within what most people do, hence why we've chosen that. But be aware that if you trade much higher time frames or much smaller time frames, things will be different, of course, and things depend on the time frame. So for each of the markets, what we'll look at, first of all, is climate. Climate is effectively trend. In which direction is the market going in? But more importantly, with climate, it's not just trend or direction, it's what are the probabilities associated with that. So what's the direction that the market's in and what are the probabilities? What we also want to understand is propagating. Propagating tells us if we're already moving down, if we're in a downwards trend, how long can we expect to keep going down for? If we're already in an upwards climate or an upwards trend, how long can we expect to keep going up for? So the reason, or the numbers that we use to get this information is we look here. On the right-hand side, these are the propagating figures that tell us what normally happens in that market. So how long does that market usually go down for or usually go up for? We then see on the left-hand side is where we're at now. How long have we currently been going in that direction? So from these two numbers, we can get an idea of if we expect that market to continue to move in that direction, or if we might, statistically speaking, coming to the end of that market movement and potentially see a change in direction. So what we also want to understand is nearest UFOs. That helps us understand change of direction as well, because UFO stands for unfilled orders. And what that means is where we expect there to be buy orders in a market that can push it upwards, or sell orders in a market that can push it downwards. Now we use the Alter UFO app to highlight for us on a chart where these orders are, and it will show us green UFOs for where buy orders are, and it will show us red UFOs for where sell orders are. So we're using technology here to analyze market data and show us visually on a chart where those stacks of orders are likely to be, which is where price is likely to turn once it reacts to those orders. For the climate and the propagating, we use our Auto Climate app. That's what we see here at the bottom. Now the Auto Climate app can show us one of three things. It can either show us a thick blue dot. That would tell us that we're in a confirmed upwards climate. That means that we're in an upwards trend, upwards movement, upwards environment, and that we have probabilities to the upside. It could show us a thick red dot. That tells us that we're in a confirmed downwards climate, downwards trend, downwards market environment, downwards movement, and probabilities to the downside. Or it could show us a thin dot of either color. That's the third thing it can show us. Now what that means, the color still tells us the direction, but the fact that it's a thin dot, that's the Auto Climate app way of telling us that there are less probabilities. We have less statistical advantage. So normally on days like that, we choose to do nothing. Here at Tradictive, it's always about acting when we have probabilities on our side. So when the Auto Climate app is showing us that we lack probabilities, we don't really want to be doing anything on those days. So again, we're using technology to analyze market data for us and give us probabilities associated to the direction of price. So we're going to understand that for each of these markets. I'm going to show you each of these charts and show you the climate and the nearest UFOs on them. As well, we're going to come down and understand volatility as well. Now, volatility just means how far we expect prices to move within given periods of time, or how fast we expect them to move. Now, we look at the current implied volatility column here, and you'll see each of these numbers are percentages. So what these percentages refer to is the expected movement by professional traders, expected movement up or down in 1 year as a percentage of its current value. So what can we expect in terms of movement up or down within a year, showed as a percentage. Now from that, we can then understand what that means in terms of movement up or down in 1 day, up or down in 1 week, and up or down in 1 month. So again, we get an understanding of how fast we can expect these prices to move within these given periods of time. We then use our climate and our propagating to understand in which direction that we're likely to see that movement, and the nearest UFOs and the propagating as well to help us understand where price might turn and change direction. Okay, so lots to go through. We're going to start with the S&P and we'll go through each one of these concepts per market. So we'll start with the S&P. We're looking at $SPX.X. That's the symbol for the index on TradeStation. I'm just going to expand price a little bit there and make it a bit easier to see. Okay, so we see on this example on the S&P that we have a thick red dot on the Auto Climate. So that tells us that we have a confirmed downwards climate. We have probabilities there to the downside. Now, normally, well, I've lost my mouse there we are. Normally, the S&P would go down for 5 candles on a daily chart. By the way, everything on that right-hand side, I'm going to round it up. So whatever the decimal place is, I'm going to round it up, effectively add 1. So normally it goes down for 5 candles, and we're on candle number 6 to the downside, meaning that we've gone past what is statistically likely, what averagely happens in this market in terms of a movement to the downside. Now, in terms of orders, we have a stack of sell orders just above us here at 3426.96 to 3479.15. We also see a big stack of buy orders. Literally, they're overlapping each other, 3352.70 to 3310.47. So at the moment here with the S&P, it's kind of forces moving against each other here. We have a stack of buy orders just beneath us, stack of sell orders just above us. In fact, they're kind of overlapping each other there. So we've got buyers and sellers fighting off against each other at the moment. We do have a confirmed downwards climate, so probabilities to the downside, but we lack probabilities for a continuous move to the downside because we've gone past what normally happens. So again, lots of forces kind of playing off against each other here, and be interesting to see which one of them wins and whether or not we break that climate and push to the upside, or whether or not the climate wins and the sell orders win and break those buy orders to the downside. So we'll see what happens. At the moment, I would say no clear direction either way on the S&P. Okay, so when it comes to volatility for the S&P, we expect a movement up or down in 1 year of 25.50%. So what that means is in 1 day, we would expect a movement up or down of 0.54 points. In a week, up or down of 1.20 points. And in a month, up or down of 2.49 points. Okay, so that's the S&P. Let's move on to the next market at CL. That's the continuous futures contract for oil. So once again, I'm just going to squidge price a little bit here so we can see what we need to see. There we go. So once again, thick red dot, confirmed downwards climate, probabilities to the downside here on oil. Now, same again with oil as we saw with the S&P. We have gone past what normally happens. So normally oil would go down for 8 candles on a daily chart, and we're on candle number 10. So again, we've surpassed the probabilities of a continuous move to the downside, meaning we lack probability for it keep going that way. Now, saying that, of course, things fall outside of probabilities and statistics. That's how statistics are made up. There's going to be anomalies outside of those things. So, of course, that's not to say that oil can't continue to move down. In fact, I would say because the buy orders are so far away, there is room for it to continue to fall down, but we do lack probabilities of a continuous move down based on those propagating figures. Now, in terms of orders, we see our closest buy orders are quite a way away there, 26.31 to 25.80. And we see it's nestled just on top of another one. So we've got 2 buy UFOs, one on top of the other, but we saw that top one just there. Closest stack of sell orders at 41.37 to 41.87. So again, with oil at the moment, we're kind of closer to the sell orders, of course, but they're still a little way away in terms of normal movement. We've gone past what's usually likely to the downside, but we do have confirmed climate to the downside. So again, nothing really in terms of real push to one side or the other. Bear in mind, if you do follow the climate, that we do lack probabilities of a continuation there, but we'll see. So when it comes to oil, in terms of volatility, we would expect a movement up or down in 1 year of 49.41%, which means in a day, up or down of 1.17 points. In a week, up or down of 2.59 points. And in a month, up or down of 5.38 points. So that's oil. Let's now look at the next market, which is gold. So at GC, that's the continuous futures contract again for gold. Okay, I'm just going to move it a little bit like that. Okay, so with gold, we see here a thick blue dot. So that tells us we have confirmed upwards climate. We have a confirmed movement to the upside, probabilities to the upside. Now, normally gold would go up for 6 candles on a daily chart, and we're on candle number 1. So in this case, we actually have probabilities of a continuous move to the upside. We also have a confirmed upwards climate. Now, in terms of orders, our closest stack of buy orders is, again, quite a way away, 1836.7 to 1825.9. And closest stack of sell orders, which we're slightly closer to, is 2039.7 to 2060.8. So again, with gold, in terms of orders, nothing close by that could move us one way or the other. But when it comes to the climate, we have a confirmed upwards climate and probabilities of a continuous move there. So showing overall push to the upside there on gold. Now, bear in mind as well, just because something is probable does not mean it's definite. So, of course, we need to manage our risk just in case we're wrong. But again, it's about putting as many odds on our side as we can. And at the moment with gold, we have, in terms of direction, in terms of climate, we have probabilities there to the upside. So in terms of volatility, we see that we would expect a movement up or down in 1 year of 20.91%. Now, what that means is in 1 day, we would expect movement up or down of 26 points. In 1 week, up or down of 57.3 points. And in 1 month, up or down of 119.3 points. Okay, last market, we're going to look at the Euro US dollar. That is the spot Forex currency pair, the Euro versus the US dollar. Again, I just need to squidge it a bit. Maybe do that so we see what we need to see. Okay, so once again on this one, we have a thick blue dot, confirmed upwards climate, probabilities to the upside. Now, normally the euro would go up for 5 candles, and we're on candle number 2. So once again, we have probabilities of a continuous move there to the upside, at least for another few days. When it comes to stacks of orders, we have a whole bunch of buy orders beneath us. I think it's 8, is it? 8 or 9, one on top of the other. The top one there is 1.1597 to 1.1507. I've just rounded that where it needs to be to the closest pip. closest sell orders are further away at 1.2344 to 1.2413. So overall on the euro, we have probabilities to the upside, many buy orders beneath us, confirmed upwards climate with probabilities of a continuation to the upside. Again, just because it's probable doesn't mean it's definite. So do manage your risk just in case. But that's what we see here on the euro versus the US dollar. It's probabilities to the upside. Now, when it comes to volatility, we see that we would expect a movement up or down in 1 year on the euro of 7.39%. which means in 1 day, movement up or down of 55 pips, in a week, up or down of 122 pips, and in a month, up or down of 254 pips. So again, the volatility numbers give us an idea of the types of movement or the volatility, the movement that we can expect within given periods of time in terms of a percentage and then amount of points or pips. And then the climate and propagating give us an idea of in which direction are we likely to see that movement happen, and how long do we expect to see that move last for, and where do we expect price to turn as well. So we're using statistics, probabilities, and technology to analyze this for us and give us objectively probable things to be doing. Okay, so now that we've done direct forces, which, by the way, what I mean by that is that the most direct forces that we have in the markets to move them up or down are buy orders and sell orders. Buying and selling, that's what moves price. That's all we have. They're the most direct forces that we have. So our unfilled orders there are direct forces, buy orders and sell orders. But of course, there can be many reasons as to why there may be buy and sell orders, which is why we need to understand indirect forces as well. Now, that could be things like commonly used indicators, fundamentals. For us, we want to look at news and reporting that could impact the markets. So let's take a look at that. Now, we show you every day, we show you the week ahead. So we'll show you the entire week every day for that week. So we see that this week, we don't have anything coming out till tomorrow. However, tomorrow does look like it's going to be a pretty high impact day. We've got retail sales, we've got Fed interest rates, we've got FOMC press conferences. It's a lot of high impact stuff happening, which, by the way, we go to fxstreet.com/economic-calendar, and we filter by high impact news and by US markets. So again, if you want to look at things outside of that, lower impact or different countries, then you can go to that link, change the filters there and see what you need to see that suits your trade plan better. But in terms of high impact news to US markets, nothing for today that we expect to happen that could cause volatility or add or remove orders. But tomorrow is obviously going to be quite a big day when it comes to that. Now we see on the left-hand side, the time in Eastern Standard Time when we expect that news to come out. So again, you can use that for your trade plan, use it however you will, that suits the way you trade best. Okay, so that is everything for today. So just a reminder then, for those that are already joining us from within the Tradictive channel, we'll see you in these stocks and investing sessions later on today. Also, 4:15 p.m. Eastern, my colleague Wayne will be coming back to look at what did happen, what went as expected with these markets where we had different forces playing off against each other, which of them won, why might that have been, and sort of analyze what did happen. So that will be 4:15 p.m. Eastern. He'll be doing that. But otherwise, like I said, you've got your stocks and investing sessions as well. For those joining us from outside of Tradictive, if you do want to be part of those sessions, you can join us at tradictive.com/youcantrade. Now, of course, I understand there are many ways to trade, many places to learn how to do it. So you might be unsure if this is going to suit you or suit the way you think or suit the way you trade. So you can try us out for 2 weeks, 14-day free access, thanks to You Can Trade. So you can join us for a couple of weeks there and then figure out if it makes sense to you or not. If it doesn't, no problem, you can cancel the subscription. If it does, then at least you've had a couple of weeks to really know that it suits you before you move forwards with that. In terms of classes, again, for people within or outside of Tradictive that might want to learn different concepts, the next one we have is backtesting. So that will be this weekend, Saturday and Sunday, 19th and 20th. So if you go to tradictive.com/backtesting live, you can learn more about that, how we do it, what it is, what it means. And again, you've got an offer at the moment. Register for any course, get an additional one for free. Again, that's thanks to You Can Trade. So you can go to the website, tradictive.com/youcantrade, and you can learn more about the different classes we do, which ones make more sense to you, and put them together in such a way where you can make the best use out of that offer. Now, if you have any questions, not just about courses or subscriptions, but anything I've covered today, anything trading related, we're always happy to help. You can email us support@tradewithufos.com and we are happy to help. Otherwise, we'll see you in the session later on today. I'll be back tomorrow morning. So I'll see you in the morning. Hope the markets treat you well today, and I will see you tomorrow. Take care. Bye-bye.